Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for August 20th, 2017, and I want to welcome you to this week's video. Now, before we get started, make sure that you sign up for ForexAnalytix. Try it for $1. It's only $1 for 10 days. And then once you do that, make sure you go download the mobile app. This way you can get it from the App Store or the Google Play Store, depending on your operating system, and you can get notifications and alerts and support and resistance level breaks. You can get them delivered, those notifications, right to your mobile device. I know I'm going to be traveling this week, and I'm excited to be able to get my team updates when I'm traveling and on the road. It's going to make things a lot easier for me should I decide I want to trade while I'm mobile. So make sure you guys do the same thing. I have to say that we probably deliver the best application out there on the market for analysis. I think you guys are going to love it, but you got to try it for yourself. So make sure you do that. Okay, now let's talk about the week ahead. And then let's also discuss maybe a couple things that happened last week. So first and foremost, well, I guess we can start with last week. We discussed a lot about like the pound yen and also like some of the other yen pairs. And what you're going to notice here is the pound yen, and I got wiggled out of this, by the way. I was short. It went past this trend line a little farther than I thought it was going to go on Tuesday, but I think it was Tuesday or Wednesday of this last week, but then we slipped through the 200-day moving average and we started to fall again. And you'll notice that if you go to the weekly chart, we have a significant foothold below this trend line that has lasted, since post-Brexit lows. And the RSI is breaking down as well. The pound yen looks pretty vulnerable. The pound has actually been quite bearish almost across the board, but the pound yen doesn't look good. You look at some of these other yen pairs, like let's go over to the euro yen really quick. The euro yen also broke a it's a multi-month trend line, but this has been since before the French election low. And we snapped that trend line, and we are staying really heavy here on the euro yen. Now we did create a bit of a spinning top or a long lower shadow doji, which could give us a bounce towards the beginning of the week. But this, I think, is only near term. That might take us a little bit higher before we roll over again. Those are just some things. You should keep an eye on the yen pairs because the stock market looks vulnerable as well. If you go over to the S&P, let's go ahead and do that really quick. If you take a look at the S&P has broken an ascending wedge. We're stair-stepping our way lower. You notice how we're making lower highs and lower lows. You notice that lower highs, lower lows. The S&P looks vulnerable for a move back to 2400, and if the S&P moves back to 2400, these yen pairs then, from a correlation standpoint, you might see some yen strength. You might actually see a lower euro yen, pound yen, New Zealand yen, Canadian yen, Aussie yen, etc., etc. Those are quite possible if the S&P continues to correct down to 2400. Remember, from a seasonality standpoint, as we're towards the end of summer, volatility tends to increase, stocks come under a little bit of pressure, and that typically will last. The stock market will underperform up until like November-ish, sometimes October, sometimes December, but into the fall. And so if that's the case, these yen pairs could continue to drift lower. I'll also take you to the US dollar Japanese yen, which is pretty vulnerable. I mean, if you look at the daily chart here, we've come down to support that's came down to 108.80. We probed below it on Friday, but there's a good chance that we could break below that and maybe trade back down to 106.30, which is the 618 retracement, and you can see it better on a weekly chart. That's from the trend lows to the highs of just around the election and inauguration time frame of the U.S. Basically the beginning of the year. a 618 retracement takes us down to, trend line support down to 106 and change. That looks very doable in the coming weeks, and if that happens, that will probably coincide with the stock market coming down and correcting a little bit lower as well. But those are things that I am looking at moving forward. But since we were discussing the yen, let's take a look at gold as well, because this could really impact what happens with the yen. Gold hit a major resistance at 1300. We all know that, and we showed failure there too. The longer term bull flag pattern is still in play, and it takes us out to, you can see this 127% extension here. The 127% extension is just above 1300. Bottom line is, if we break above 1300, we should see yen strength. So the gold market is still really bullish, although this daily candle suggests that we might come back before making another run at it. It's such major resistance. To hit it multiple times before we finally break out is common if it does break out. But if it does break out, the one thing that we have to take into consideration is that it is a major breakout of a multi-year trend line. And so this could really start or perpetuate yen strength for a long time to come. But I'm sure some of you guys want to talk about the dollar, and I'll tell you, the dollar index, the dollar index has been, well, here's the weekly, and you can see we're right at support here, and we've dropped pretty aggressively. Relative strength is oversold. You can see how the RSI is oversold. We're near a lot of support, but the bounces have been shallow. And when you have a shallow type of bounce, this is showing you a possible bear flag. You can see how we have the high here, the low here. We've been moving sideways, slightly higher. That's the genetic makeup of a bear flag pattern. And while we stay below 94 in the dollar index, a lot of people, myself included, and I'll tell you, I have played the dollar on the long side the last couple of weeks. It's been a tough trade. I've made money overall, but in this type of shallow bounce, it's been really difficult. Think about a lot of the traders or institutions that are just, covering up some dollar shorts, or maybe even picking up dollar longs on a value type of proposition, thinking, hey, we're near support, good risk reward down here. They're not really getting paid for that trade. And so therefore the dollar index is vulnerable. Now, we are going into a week which is, towards the end of summer, the last couple weeks of summer, before we start seeing traders come back, volatility start to come back, volume start to come back into the markets. But there is an important event this week, and that's the Jackson Hole Symposium. Now, this week, previously, we had comments that the ECB, we had received comments that the ECB or Mario Draghi will not be discussing monetary policy. That helped the euro push back off of the lows. But when these central bankers are being talked to and they're being questioned and they have statements, things can slip out. And so we might get comments about monetary policy, even though there might not be anything planned. We could still see some volatility here. But the euro, and I'm going to take you to the euro dollar really quick, and just let's see, I'll take you over to here's the daily chart. You can see the daily chart. We've got some really key trendline support that comes in around 116. We've been probing this bearish wedge, and if something, and you'll notice there's an apex being developed, and I think the apex still could tighten up between that 118 and 117 level. As we tighten, there's a chance that we could break higher or lower, but even on a break lower, the downside might be limited. If we break through 116, that would be quite bearish for the euro. We could see maybe a correction back down towards 114, or a more significant upside bounce for the dollar. But the risks here are, we're in a really strong trend, and the euro has been resilient. How many institutions or traders have really been trying to short the euro dollar, but not being paid. Again, it's like being in the dollar index. It's being long the dollar, but you're not really getting paid. Well, also keep in mind, technically, the euro is consolidating above this range, the previous high. We're consolidating above that breakout point. And the longer we stay up here in the euro, the more the risk is for an upside break, because people are shorting it. They're not getting paid. People have sold their longs. They're not getting any type of pullback. The longer we hold up at these prices, the more the risk is for higher levels in the euro dollar. So again, the end of the week, we do have actually on Thursday the Jackson Hole Symposium starting. So look for comments Thursday and Friday. We have a couple other economic data releases this week. We have durable goods at the end of the week in the U.S. We have a second estimate GDP for the U.K. That happens on Thursday morning, and on Tuesday we got retail sales out of Canada. But overall, a pretty light week in summer trading, so you have to be extra careful. But I do think that the stock market is still vulnerable for a further correction. We could see 2,400 in the next couple of weeks, and if that's the case, we might see some yen strength. And also watch this dollar. It is consolidating at low levels, or the euro dollar is consolidating in a breakout area, which makes it vulnerable for further upside. But those are the things I think you should be watching for this week. Do me a favor, if you love this video, or if you love the weekly updates, the week ahead videos, please click that little thumbs up button on the bottom of the YouTube video, and also subscribe to this channel so you can get those updates as they come out immediately before they're tweeted out or sent out in the newsletter. You guys have a great week this week. Good luck. I'll be traveling around. I'll be on vacation, but you guys have a great trading week, and we'll talk to you next Sunday.